Hey guys, welcome to today's stream. I'm going to give everybody a moment to join and then we will get underway. Welcome. Let me just ping the Discord. Welcome, guys. Big up PIQ for sharing. Appreciate you always, brother. Welcome. So, oh god, that's a little bit hot. I didn't expect that. I usually sprinkle a bit of cold water into my coffee. I have it black. I don't know if you can see on there. Black coffee. I'm literally just an instant coffee kind of guy. And yeah, I forgot to put cold water in this, so that just burnt my mouth off. Welcome, guys. How we all doing? Awesome. Lots of people jumping in. So welcome, guys. If you haven't been to one of these sessions before, my name's Kieran and I'm head of UK growth and business development here at Darwinex and Darwinex Zero. I'm only saying that as a caveat now because there's more people in the sessions than there are usual. So I'm presuming there's lots and lots of new people here, which is fantastic. Welcome to you all. I wanted to go over some different topics today, things that we don't really talk about a lot. And the first topic is that I really want to talk about this because I've been having conversations with people this week, and it seems that the same conversation keeps popping up over and over again. And it's making a career out of trading. Okay. And making a I'm so early. Hello, Kieran. I hope you had a good day today. It's been a good day for me. I've been super productive today. I got all my tasks done pretty early on. So this afternoon, I've just been vibing, getting some additional work done and trying to get ahead on my next few weeks of things that I've got in the pipeline. So I hope you've had a good day too, my brother, and welcome to the session. But the thing that I wanted to talk about first was making a career out of trading. There's this I'm not going to call it a misconception, but there's this ideology that a lot of people have that they're going to transition from being this retail trader who has very, very little experience or knowledge on the markets outside of technical charts. I'm not talking about a strategy or very good idea to put these lives on schedule so people can see if a live is coming up during the day. Yeah, that's something that I'm going to do. I've been doing it via StreamYard, but you can forward schedule them. So I'll probably look at doing that this week. Thank you for the reminder, dude. Although most people know that it's Tuesday, Wednesday, and Thursday, but it still makes sense to have it on the schedule. How are we doing, Rob? Hope you're all good, my man. Where was I? Oh yeah. So the majority of people who come into the market who learn how to trade, they will go through some mentorship or some course, watch YouTube videos, look at baby pips, or everything and above. And very often they build a strategy that is very technical based. They will listen to people who probably aren't qualified to teach other people. The reason that they're not qualified is most likely because they literally have zero qualifications. They don't have any training to be an educator, which is a massive, massive thing, right? Like you can be a fantastic trader, but a really bad educator, right? It's two completely different skill sets. And conversely to that, you can be a fantastic educator, but a really, really poor trader. And being good at one doesn't always mean you're good at the other. And that's important to remember, right? Because if you've been a trader for 2 years, I say be a trader. If you've been learning how to trade for 2 or 3 years, you still have barely scratched the surface with actually what trading is, how the markets work, who are the key players behind the scenes. And I'm not just talking about people who move markets. I mean, what's an LP? What's a prime brokerage? All of these different things, all of the cogs that are turning in the background, and having a lack of understanding of that will, subsequently make you have a lack of understanding of trading itself. Now, I'm not saying that you cannot be successful as in that position and that you have to know all of these things. But in my experience and in the experience of a lot of people who I worked with and talk to on a daily basis is, or at least I should say the most successful people, when it comes to trading they've all had experience working in the industry, not as a trader. Maybe it's as a trader, but in a professional trading arena. You know, maybe they worked at a prop desk or a hedge fund. Maybe they worked at a bank, but they've had some exposure to actually what goes on behind the scenes. And I advise everybody to do this. Everybody who always talks to me about, you know, I'm really struggling to make trading work. It's what I want to do long term. It's what I want to do for, you know, for a career for the rest of my life, yada, yada, yada. And I always say, your first goal should to be get a job in the industry. You know, like what I've done with Darwinex, right? You should be wanting to work in the industry. You should be soaking up knowledge left, right, and center from everybody who you talk to. You know, at Darwinex, we own a broker, we own an asset management, we own an asset manager, and we have a hedge fund, right? We have the index. So there's so much exposure there to different moving cogs in this industry. I'm speaking to so many different people that it's very, very difficult not to progress and not to progress that understanding. I mean, there's plenty of people who I could point to who have been through similar things, right? David Bell, you know, who's the owner of Think Academy now, used to be Macrodesiac. He was the head of growth for TradingView for 2 years when they absolutely catapulted through COVID. You know, he worked at a brokerage before that. PIQ was a professional trader before opening PIQ Suite, and all of these people, even Javier Colon, right before he built Darwinex, he was a trader. There's all of this experience intertwines with working in the industry, whether it's building products, even being on a support desk, right, for a broker or a or a prop firm. Tail, welcome to the session, my dude. Who's that handsome fella on my screen? He said, yeah, well, I hope your camera's not on because you're not in the session. But I can't hammer home enough how not important this is, but how much it would benefit a lot of people in their trading career is just being around people from a professional capacity. Sitting at home and watching people on YouTube will not give you the understanding of behind the scenes and how things work. Whenever somebody says to you, this is what banks do, this is how banks trade, this is, you know, this is what the market makers are doing, they have zero clue, right? Because if they knew that, they wouldn't be on YouTube telling you that that's the case, right? So anybody ever says that, I mean, A, it's an instant red flag, but B, they probably have no idea what they're talking about. Because when you talk to people who do have a clue, who do understand what they're talking about, you realize how little you actually know. And it's quite humbling because you realize how, like, again, going back to my point is you're scratching the tip of the iceberg. There's so much underneath the ground that you still need to uncover, or under the water, I guess, if we're using the analogy of an iceberg. Yeah, the white line. Tail said, what's a white line on Darwin? I also have that. I have no idea. I thought I'd crack my screen this morning. I have no idea. Maybe it's some UI bug. I was going to ping the team earlier, but I thought it was just me that had the issue. So I will actually send them I'll send them a message and just let them know. Could we have analysis on GBP USD? Yeah, basically just put your stop where my entry is and it will never get hit effectively. Rob, anyone here traded at a prop desk who has a ticker? I mean, I've traded at a couple for a very short period of time, but never been like, it's all my experience is remote. It's never been, I've never brushed shoulders with other professionals, which again is kind of not what you need, but it builds you as a trader so much, right? Like every professional or ex-professional I've ever spoken to, they view the markets and generally view trading in a completely different way to, you know, anybody who hasn't worked in a professional environment. They're so agnostic to what's going to happen. They're so agnostic to strategy. They don't really care. You know, and it's quite refreshing to be around people like that because you begin to adopt to the same mindset. And one of the biggest things, and I went through this myself, is I was giving my time and energy to people who probably didn't deserve it because they were in a different part of their journey to me, and I was being held back by giving these people my time and energy. And when I stopped doing that, I watched myself become more like the guys who I wanted to be, like a pro, thinking about things like a pro, not worrying about the next payout or which prop firm to go for or all of this basic stuff that, you know, is kind of common sense. Anyway, I'll stop ranting on about that now. What's the opinion if you are 2% this month already to get a booster? It's your choice, dude. I mean, if you're confident that you'll make it back, of course, like go for it. I always say, salutation, how we doing, risk 1%? Hope you're all good, my bro. I always say the best time to get a permanent allocation or a booster is obviously when you're in drawdown, because if you, I don't know what I scrolled down because of the white line, didn't I? The best time is always when you're in drawdown, because by the time you're back to break even or a new high watermark, you'll have already made performance fees. So of course, you're kind of giving yourself the best chance. Because the worst time is to buy it at a new high watermark high, because obviously when you do that, you're kind of tempting fate, right? It's just sod's law that you're going to go into drawdown straight after that. Give me 2 secs, guys. So my kids are at the bottom of the stairs screaming and shouting. I could hear them. It's putting me off. You could probably hear him too, to be fair. He always picks up everything. But yeah, I mean, getting a boost. Let's take a look. I'm presuming that you're asking for XXBI. So what's your drawdown now? How long have we got? June, July, August, September, October. Okay, so we've only got 6 months record, so it's not going to be 100% accurate. You come back here. Don't you dare go to that window and start barking. I know what you're like. Come back here. Okay, so this is, again, I'm not telling you to do it or not to do it, but we're just going to look at averages here, right? Load up Epic Pen. Sit down, you big girl. Go on, sit down. If we look at averages, okay, your 2 worst drawdowns since your Darwin's been live is here, okay? You're slightly above that now, okay? So over the past 6 months, and again, 6 months isn't a very long time frame. However, it's enough. I'm presuming that you've got some statistics or data on your strategy before you started trading it on Darwinex. I think you trade with EAs anyway, so you should know. Excuse me, come back here, please. Nala, come here. Yeah, that's what I thought as well. So I presume you know what your max drawdowns are or what your drawdown periods are like, right? But to me, this is kind of the max extension to the downside that we have. Ziggy, how we doing, dude? Hope you're all good, my man. So I'd be looking at this going, well, generally, most times when I get into this much drawdown, that's when things start to turn around. And that's when, you know, it's like my average, it's like your maximum adverse excursion, but on your equity curve instead of like on a trade by trade basis. And that's kind of the best way to time boosters and permanent allocations, just because it makes more sense to get it when you're in drawdown, right? Same as like, I used to talk about this with funding challenges as well, is if you bought 4 accounts, for example, cycling them makes sense. So not starting them all at the same time, because if you go into a drawdown, they all go into a drawdown. But if you stagger them like 1 or 2 trades, at least then they're not all going through the same curve or the same cycle as one another. But again, like, use this as kind of an edge in itself. If you know that your average extension is minus 5%, which I think is maybe it's like 4%. Should have used 4%. And if you're at like, I don't know what you hear, 4%-ish, it's like you're more likely to recover here than to keep going based on what we know about your trading. Again, you might have previous data which shows, you know, down here and then back down here on your drawdown analysis, but we don't have that, right? So I would say it's probably the perfect time to do it, but again, completely down to you. The biggest thing is here is if you started to, like, let's say you bought a booster now, is it going to affect your performance knowing that you've now got more capital? Like, is that going to change what you do, or are you going to see it as, you know, just another day in the office sort of thing? Because if you see it that way, then you're going to perform right and you'll probably recover the same way that you did on this occasion and this occasion. And you're, I mean, yeah, it's a bit of a, we could count this one as well, I suppose, this period of drawdown here, although it's a little bit less. How much did it say? 2,365. Ziggy, I wish I could do Darwinex as a Canadian, so I could do Interactive Broker. The only option for me is the Darwinex 01, which I don't want to do. Yeah, the issue with Darwinex is obviously because we're regulated. It's a nightmare to offer. Well, you could go the easy way, right, and just build an offshore broker and offer anywhere, but obviously that's not that's not what we stand for. So we have to be bound by the regulators and what they want us to do and not to do. And I know the US is an absolute nightmare. I'm not too familiar, to be honest, with the regulatory bodies in Canada, and I just know that they're strict as the US, pretty much. But yeah, interactive brokers. I mean, I don't even know if you can use interactive brokers if you're in Canada. Like I say, I'm not very well versed with Canadian law or regulation, but I get that with zero. Like, it's not for everybody. And to be fair, like, I say this about everything, right? Like, Darwinex isn't for everybody. You know, prop firms aren't for everybody. Trading professionally isn't for everybody. Not everybody wants. I actually had an interesting conversation with somebody who is like a big account on social media. They've been very, very successful through trading. And I was having a conversation with them, and I said to them, you know, I have a good network of investors and a good network of companies like that I could connect you with. Like, are you open to managing capital? And they were like, absolutely no way. I don't want the pressure of managing somebody else's money. I like managing my own and doing my own thing. So even trading professionally, like with investor capital, that's not everybody's goal. And you kind of got to play to your strengths, but also what you want to do. Yeah, it's good that they offer Darwinex Zero, but that route won't work for me. Yeah, it's completely fair. Like, not everybody wants it. Tail, you got to get off my back about this tribe. I'm trying. I'm tribing. I think there's a bug on XAQP. There's a bug on Darwin. I saw it on XXBI, WXBY, and XAQP. What's the bug? Is it just the line? Yeah, Canada's pretty bad for regulations. Yeah. I don't know them too much, but I just know that every time Canada comes into a conversation, it's like, oh yeah, it's basically like the US. I do use interactive brokers, but other services like Darwinex and crypto and others won't do business with Canadians in many cases. Yeah, so you guys have it tough, man. And US traders, like, obviously we have a lot of US traders through Darwinex Zero because they can't come through via Darwinex or even invest. And the conversations that we have is, you guys are bound so hard by the regulators over there. I mean, the FCA are tough regulators. Like, they're tier one, you know, they are really strict with what you do as a business, but they're actually not that bad when it comes to flexibility for like the consumer, if you will. Whereas I know the SEC and bodies over there are really, really strict. Like, they won't let you do anything that they deem to be risky, but then they let the president of the US tweet about meme coins and create his own meme coin to make it make sense. It's tough. Is there a reason that you use D0 instead of Darwin? I'm thinking of migrating soon. The reason I use Darwinex Zero, well, because I obviously work for Darwinex, so it's good for me to use the products. I used to use Darwinex when I was a manual trader, but now that I run a multi-strat portfolio, the minimum equity I need in my account roughly is about 50K on 1x risk on the leverage that we have, maybe 25. Oh yeah, I definitely get it free. Not monthly payouts, so I'd have to pay for that. So I just have it quarterly. But yeah, so I would need 1x risk, which is what I run my portfolio at master level. I'd need a minimum of like 50K because I've got 29 strategies. So worst case scenario, and they all start firing off on the same day, yeah, I'd need a lot of margin in the account. Do I want to put 50K into account when I can do it on zero? I'd rather just do that. Bear in mind, I've run my portfolio with such low risk anyway. So the risk of me putting my own capital in there to make, like, on 50K, I'd probably make, I don't know, 5 to 10K per year max. It just doesn't make sense to me. I haven't changed my own risk percentage. I change yours as well, dude. I'll bring yours right down so that you don't go above me in the rankings. But yeah, I mean, I was thinking about potentially migrating down the line. But I think instead of that, what I'm going to do, and again, it's not like a recommendation. It's not something that I would say you do yourself. This is my plan. Instead of instead of migrating my account to Darwinex and putting, I reckon I could probably increase the risk and maybe bring the minimum investment down to like 25K. If I doubled my risk at signal account level, but then I've got to worry about lowering my VAR over time, increase my risk multiplier. I just can't be asked for that. So what I think I'm going to do instead is just wait till XAQP is open to investors, which should be January. And then I'm just going to invest my performance fees into it and leverage it up by 3 times. So if you're not aware, if you invest into a singular Darwin, you can leverage up to, is it 3x or 4x? I think it's 3x. So effectively your VAR would be 6.5, 13, like almost 20%. So obviously these would be 3x effectively moving forward. Again, I know my max drawdown, I always talk about this. I know my max drawdown has the scope of going to like 9.5 to 10% at risk adjusted level. So if I leverage up by 3 times, I know that I'm looking at a 30% drawdown max. You know, and then in the past 7 months, that would have been like a 90% return. So I'm happy with that risk and that drawdown, especially considering that I'm going to start with my performance fees anyway, because I think I've got like 3K pending on here. Let's have a look. 2.8K. It's come down since we hit the high watermark high the other day. I've got 188 euros that are in there that I've just never took out, and I've got 2.8K that should be paid at the beginning of December. So once that's paid, I'm just going to keep it in the account. It's about 3K in total. Send it to my Darwinex wallet, and then I'll just invest it into XAQP at the beginning of January when it's open to investors. Scale it up so that a 3x leverage, it's basically like I've invested like 9 grand. And then yeah, that's the way I'm going to play it, right? Because it's easier than going, oh yeah, I'm going to stick 25 or 50K into an account and trade that. It just doesn't make sense in my position. Could you show me how to increase leverage on Darwin? What do you mean? Do you mean physically increase the leverage, like request a leverage increase? Or is that what you're asking? Because on Zero, you can't do that. You could go through, if you went through Darwinex, you could request to become a professional investor and they would increase your leverage, or they could increase your leverage, I should say. Yeah, you can invest into your own Darwin. Just the same way that you can invest into any other Darwin. Because what my plan was to, with all my performance fees, I was just going to invest them into the index, which is the hedge fund. Index. But the problem is with the index, we don't allow for leverage. Okay, so what you put in is the amount that you play with. So it's currently got 7.8 million. I'm about to hit 8 million. Like that's big because we've barely done any marketing for this. For the indexes, well, just as a project asset, whatever, we've done very, very minimal marketing, and we've managed to get to 8 mil in the past like 4 months, maybe 4 or 5 months. So that's big. We didn't think we was going to get that much this side of this year, but our goal is or my goal in my head now is 10 million by the end of the year, and then 50 million by the end of next year. If we get 50 million in the index, if you're in DarwinIA Gold, by the time we get 50 million in the index, like there's going to be a lot of traders with some serious capital at Darwinex. So that's why we're going so hard now on trying to scale the index. But selfishly, going back to what I was saying, is I was going to funnel my performance fees across to the index. But obviously this is more of like an institutional asset, right? A, I can't leverage it up, and B, we're looking between let's say 16 to 20%. I mean, this year is a bit of a red herring, 2021 with a 51% return, but on average we're looking 16 to 22%. Okay, you know, whereas I can put it into myself. Yes, of course, it's much higher risk, but again, I'm beginning with my performance fees anyway, but my returns can be far higher. And I'm the one who's in control, right? I know exactly what trades are being placed. I know why they're being placed. So just again, it just makes more sense for me to invest into myself. And the benefit is I can leverage it up by 3 times. 3x for leverage. Okay. I got you. So you're asking to leverage on thingy. So you have to have a Darwinex account, so a proper Darwinex account. Let's just go XAQP. So you have to have a proper account on here. So you see I'm logged into my Zero account. I don't think I've got an investor account set up on here. Let's take a look. How do we do it? I can't remember. I don't think I've set it up because you have to sign loads of risk mandates and stuff. And I don't think I did that. No, I can't remember how we change it. I did it on my old one. Maybe it's because I'm on a demo. I don't know. I'm gonna do. I don't know. I can't remember off the top of my head. But yeah, you can change it to 2 or 3x. Anyway, like I said, I did it on my old account, but that account's inactive these days. Yeah, we'll take a look at your risk in a moment, Rob. No stress. Minus 1%. There must be trading GBP. Yeah, there must be. Can I use my performance fee to invest in other Darwins? Yep, you can indeed. That's exactly the process that I was talking about. So you should be able to withdraw it to a Darwinex wallet. So that should be an option when you go to withdraw your performance fees. So you can link it to a Darwinex wallet, which would be a wallet on the Darwinex exchange. None of this is financial advice, by the way. And then, yeah, you send it there. We'll pay it to your Darwinex wallet, which you could then use to invest. Tail, but you still need 10K to join, right? You do as standard, but obviously because I'm a Darwinex employee, there's exceptions that we make. But yeah, generally you still need 10K as a retail investor. Ben, got 11 Darwinex accounts, most created within the last 3 months. Got 1 in gold here and a couple just got allocation. Fantastic work, dude. I mean, 11 accounts. That must be like an absolute record. What's the one that's in gold? Let's take a look at it. Alain, you became gold this month. You already have 255K. Congrats. Appreciate that, dude. I don't become gold until January. I've hit the requirements. So where are the requirements? So I've got over 20% return because I'm at like just under 30. And my return to drawdown ratio is 6.7, which is far higher than 2.5. So as long as my return doesn't dip under 20%, that would give me like what, a 10% drawdown, maybe just under a 10% drawdown. So my risk, my return to drawdown ratio would come down quite significantly. I don't think that's going to happen between now and January, of course, but if it did, then yeah, we'd have to revisit this. The only other requirement I need to fulfill is another month in December. So it does say April, but I started trading on like the 28th, was it 29th of April, 28th of April. So 1 month, 2, 3, 4, 5, 6, 7, 8. So I'll tick off 8 months at the 28th of December, get promoted into gold a couple of days after that. And then I'll be open to investors in January and open to DarwinIA Gold. Oh, Hawaii is some money. I had one investor yesterday and he already left. Yeah. So listen, some investors are super, super finicky. Okay. They don't stick. And it doesn't really matter, right? Intraday, investors joining, leaving, whatever, it's only going to harm them. Okay. And I'm saying this like from an agnostic perspective. I'm not saying that they're evil or what have you. I'm just saying if you, and this is outside of Darwinex as well, right? You're always going to have charges, commissions, performance fees, management fees, all of these different things. And if you're buying an asset and then selling it 2 days later because it hasn't done anything, it hasn't moved, you've paid commissions for nothing, and then you're going to go and do the same thing again, and they're going to burn through their part of capital or part of cash and never get anywhere. So people like that, you don't really want them invested into your Darwin. So yeah, that's kind of my little what I've seen over the past couple of years. And generally, like investors, I always say, are like sheep. They will go where other people are, which is one of the reasons why we launched Index, why we launched Darwinex Labs, and why we've now launched DarwinIA Hedge Zero. I mean, Hedge Zero is not really for that reason, but it definitely helps, right? Is when you get your first investor, which is Darwinex, it already shows that somebody has taken the plunge. So for any other investors that come on and start looking, okay, who do I allocate my capital to? They're always going to go to the ones who've already been allocated. Because if you've got 5 Darwins with like fairly similar performance, right? One of them has 10 investors, one of them has 1,000, one of them, and the other 3 have 0. You're probably going to look past the ones with 0. It's just human nature. Then you're going to look at the 10 and 1,000 and you're going to go, well, only 10 people have trusted him, but 1,000 people have trusted her to trade. So I'm going to go there. Okay, I'm going to follow that 1,000 people because if I'm wrong, well, at least 1,000 other people are wrong as well. It's like some weird human psychology. So at least when you have your first investor and it's Darwinex, it's obviously stickier because we're investing for a reason. and therefore it makes it easier to get, you know, investors moving forward. WDIH, let's take a look. Got into gold tier a few months ago, don't have 255k yet. I mean, you got to remember, I've been on, my record went on a tear. So I had a massive May, which boosted my, that's basically my first month of trading. So it got me off to a good start on the rating calculator anyway. That month's now dropped off of my previous 5 months return. But I had a solid 4 months from July through October, still with a relatively decent drawdown. So I've just been, I don't want to say lucky because I don't think lucky is the right word, but I've been lucky in terms of my previous 5 months return has held me up on the rating calculator so high over the past few months. So yeah, I do have a decent amount of AUM to say that I'm in silver, I guess. Won't everyone go for the Darwin with the most invested capital or the top ones? I believe so. That's what we saw before and is why we released the index to kind of combat that, because we saw that if I load up THA is the guy who was managing about 38 million at the peak. How much is that? I shut off to new investors now. Strange. Yeah, so he's managing about $38 million at the peak, and he's now managing 17.5 million. The majority of this is, well, A, because he's had a couple of slow years. Like this year, he's negative on the year. Last year, he only made 4%. The year before, he was still positive with 13%, but it was lower than, you know, the previous couple of years. Well, it wasn't lower than that year, but it was lower than the previous year. So investors are starting to look elsewhere. We saw a lot of capital move from THA into SYO because SYO was still performing, who is the second most capitalized Darwin. Probably take over THA next year, I would presume. But yeah, you're correct. Going back to your point, everyone would just go for the person with the most invested capital. So there was a point where Atto had over, or THA, I should say, had over 1,000 investors. Again, because it's very easy to just go, well, everybody's over there, I'm just going to go and follow suit. That's the guy who everybody else has trusted. So my due diligence is easier because 1,000 other people have done their due diligence, you know, proving that I should put my money there. Now that we've got the index, it's fairly spread because we allocate out to the traders. So if we take in 10 million, at least we know where that 10 million is going. And it's not all going to go to THA, ERQ, SYO. It's going to be distributed fairly. ERQ is a great one. A fantastic Darwin ERQ is. I think he's got a longer record than THA. 2014, so it's 11 years. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, just over 11-year track record. Average yearly return looks to be about 15%. He kept shutting off his Darwin to investors. So basically, when you're trading on Darwinex, you can set a max cap. So you can say, I don't want to manage more than X amount. And he kept setting his cap. So you can see it was closed investment all through here. And then it kept going through periods where it was shut off. And that was down to him. He was the guy who was doing this was shutting off and saying, I don't want to manage any more capital. And we was basically banging his door down saying, listen, you're one of the most talented traders we've ever seen. Please let us invest more capital. And he did. And so we've just plowed way more money into him. I don't know how much we have invested personally into ERQ, but I know it's a significant amount of money. And then you can see his investor capital curve is just absolutely skyrocketed. And this coincides with the index, right? So as the index is being released, what we're seeing is traders' investor capital curve is kind of just exponentially growing at this point. Rob said, is that why DarwinIA Hedge invests in us? No, Darwinex Labs invests in you as like a prop fund. So we have our own personal capital, I believe, but don't quote me on it. I believe we've got about 11 million in the Darwinex Labs fund. And basically we invest that into traders. We run it at fairly high risk because it's our own capital. And it's kind of like, we're happy to run it at higher risk. The index is run at lower risk because we're dealing with external capital. DarwinIA Hedge Zero is simply to hedge your performance fees from DarwinIA Gold. So anybody who goes into DarwinIA Gold now and has active allocation and is above a high watermark on their Darwin, we invest 66% of your exposure to that DarwinIA allocation. Basically meaning if you had, let's say, best way I can explain it, if you had 100K in DarwinIA allocation, and we go, okay, well, you're effectively managing 0.15% of that, or 15% of that, sorry, because that's how much you're going to get paid out. Okay, that's your performance fee split. So we go, your buying power is essentially 15,000. Okay, so we hedge that by 66%. We're with the goal of eventually hedging 100% of that. But at the minute, whilst we're testing it, we're hedging with 66%. So for somebody with 100K allocation, we probably put about $9,900 into that Darwin. So basically what will happen there is if the trader then makes $1,000, let's say the trader has $1,000 payout from that 100K allocation. Well, our investment into that trader's made, it wouldn't have made the full grand because we've only hedged 66% of it. But in that case, it would have been made $660 in performance fees. Now, when we're paying out that trader from that allocation and they're owed $1,000, we go, okay, well, here's the $660 that we made by hedging your performance fees. And then we would make up the rest, the other $440 until it hit 1,000. $340 until it hit 1,000. My mental maths is not good. Let me tell you that right now. So that's why the DarwinIA Hedge Zero doesn't pay performance fees directly, because the idea of that investment is to make the DarwinIA Gold program more sustainable, because we're actually hedging out or we're generating real performance fees from your virtual allocation. Hope that clarifies. If I butchered that, let me know and I'll cover it again. Yeah, hedge doesn't pay fees. I got an email today. Yeah, it doesn't, and it does. Like nobody makes money from DarwinIA Hedge Zero. That investor is designed to hedge our exposure as a company to the DarwinIA program. So if we can hedge off 66% of that and then eventually 100% of that, essentially what we can do in the future is as we grow, we can give out more allocations, we can increase allocations, as long as we do it gradually, because we're hedging out all of our exposure on the back end. So even if you make money from DarwinIA allocations, which I'm sure everybody understands and is aware they are virtual. So we have the investor capital, we have the index, all of that is live. It's real capital, real market orders being executed. The DarwinIA allocations is all virtual. Okay. However, we still have a commitment to pay out the performance fees to the traders who earn money through the DarwinIA allocations. Okay. So it's a more sustainable way for us to go. We can pay you out regardless. If you lose money, make money, we can still pay you out because we backed you with live capital to hedge the exposure on the DarwinIA allocation. Hope that makes sense. Risk 1%, what requirements does the index look for? Is it big one-off returns or consistent small returns? So there's a few different things that we go through. I'm wondering if I've still got the presentation somewhere. Let's have a look. So I ran this webinar a few months back when we released the index, and it was like 2 hours long, right? It was a long webinar. Here we go. So this is how we classify your strategy. Hold on. Yeah, that's what we look for. Okay, so strategy classification. So this is for inclusion in the index. Okay, to answer, who was it who asked it? Risk 1%. So from the top to the bottom, the top has the most importance on this list. The bottom has the least importance. Let me turn a light on as well, because I just realized I'm looking hella dark right now. Not sure if that's going to make any difference whatsoever. It definitely has. So most important thing is track record longevity. So essentially, the longer your track record, the more we understand about you. The best way to look at this is your experience score on Darwinex. because this does depend on your strategy style, right? If you're a swing trader and you take one trade a month, then obviously it's going to take a lot longer for us to understand exactly how you trade consistently. If you're taking 100 trades per day, we don't need 10 years the way we would with a swing trader who's taking one trade a month. So we work it out in D periods. So you can see this is my account again. I've done 7 months. How many trades have I done in that time? 460 trades. So that's an average of 3.3 per day. And I'm on my 7th D period now, giving me an experience score of 5.8. Okay, so it's not that great. Like, and essentially all this is measuring is, can we accurately say that this guy is going to consistently do what he's done in the past? And again, the only way that we can know that is through time and the amount of trades. The more data that we have from those two variables, the more confident we can say, you know, this guy is going to continue to perform the way that he has, because that's what he's been doing for the past 3 years, 5 years, 10 years. So essentially, if your track record is, you know, a week old, then yeah, you probably wouldn't be included in the index. It's not to say that, you know, if you go into gold, that you're not going to be included straight away, but you would probably fall down the list of ideal Darwin compared to somebody who's got a 3-year track record if your performance is the same. Okay, if you've got a very similar performance. Then it goes into loss aversion profile. So this is the loss aversion chart where it looks at your maximum adverse excursions and maximum positive excursions. So basically, how far do you let your losers run against you? How far do you actually let your winners run? You know, is it typical behavior? Do you do the same thing? Are you consistent, or is there massive spikes? And, you know, you've made one massive trade that has, you know, basically been 90% of your return. Because if it does that, it makes your track record look a little bit, you know, not as consistent, not as good. Trend orientation. So, okay, classification of the strategy. Do you go pro trend? Are you against the trend, or are you neutral? Then key asset class, correlation, exposure. So we group traders into, okay, this person trades indices, this person trades gold, FX, etc. What we do with that, which is kind of a side note, is we measure everybody's value at risk on an individual basis. So we look at the traders on an individual level. However, we would also group everyone together. Let's say all NASDAQ traders and all gold traders, they would be put in their own group, and we would monitor the value at risk of the group as well, so that we can limit exposure to assets. I can send you a link to this. No worries. I can download this as a PDF and send it out to you guys. I can put it in the Discord if you would like. So we would group your, let's say we've got 50 traders in the index who are all trading NASDAQ. If everybody's trading NASDAQ and it's just absolutely rallying, or like the recent run we've seen in gold, we had major exposure to gold. Okay. And so what we do is we monitor the value at risk of that group, so that we know as a group what is our exposure. Okay. Because if the market turns, like, it might look really good yesterday, today, tomorrow, it might look really good. But what if the market turns and we're way overexposed? Okay. So we would then monitor their exposure as a group as well, which would allow us to make rotations based on our exposure to a specific market. Next is strategy, discipline, and consistency. I believe this is more of like a manual review where the Darwinex Labs team will go through the Darwin. They will look at their trading behavior. They will look at, you know, average hold times, their maximum excursions, making sure that everything is consistent, right? It's not saying that you have to do exactly the same on every single trade. It's not saying that your stop and your target has to be 10 pips and 20 pips. And it's not saying that. What we're saying is, do you do repeatable things over time, or are you a trader who relies on Hail Marys? Because when we're looking to allocate, you know, 100K, 500K, a million, we can't rely on Hail Marys. It's not going to work as a hedge fund, or from a hedge fund perspective. Then strategy, execution type. So are you an algorithmic trader, discretionary, or do you mix? Then index drawdown correlation. Okay, so this is a massively important one for anybody who runs multi-strat funds or multi-strat portfolios. Even myself running XAQP, I do a lot of work on drawdown correlation when I'm looking at individual strategies. So basically, this is going, well, the index saw its drawdown or its biggest drawdowns during this kind of this time period. What was happening in that time period? Okay, that was Trump's inauguration. This was Trump talking about China tariffs. This is yada yada yada. Does this trader go through drawdown at the same time as the index? Because if you do, it's less desirable, right? If we're trying to build a portfolio that can withstand any market condition, any market cycle, of course, it's going to have good and bad periods. We know that. But what we would like to do is, rather than, getting 100 traders who all perform at the same time, who all do well at the same time, it'd be great to have 50 traders who do well at this time and 50 traders who do poor at the same time as them doing well, and vice versa. And that way, I always talk about this in these sessions. Instead of going into drawdown, you tend to have stagnation periods, which is when your traders are kind of battling off against each other, okay, until they all start to let their expected value play out. If you have 100 traders with a positive expected value, it doesn't matter what happens short term, as long as they're not all negative, as long as they're not all positively correlated with one another, because you may as well just allocate to the one guy. Okay, if they're making the same, return and the same drawdown in the same time period, it doesn't make sense to give them more money, right? Because they're doing the same job as each other. Risk management stability. Okay, how stable is this person at managing their risk? Very, very simple thing. Of course, obviously, we have the risk engine that manages risk on our behalf. But what does the trader do? Is the trader sporadic, or do they do the same thing day in, day out? Do they trade? Do they let losses run against them? Do they have stops? Do they do X, Y, and Z? So that's a very brief overview. I think if you want a deeper explanation, like I say, there's a video on our YouTube channel, on the Darwinex and the Darwinex Zero YouTube channel. And I did like a 2-hour presentation on this. It wasn't all on this slide, of course. But it was like this whole thing. I mean, there's 15 slides, and one of them's those two are basically redundant. So there's like 10, 11 or 12 slides. And I spent 2 hours doing it. That's weird. That line is on here. Tail, can you see this, dude? That line we were on about, is that the bug that you was on about, that you could see the line on XAQP and XXBI? Because it's on here as well. That's bizarre. Maybe it's a Windows thing. Maybe Windows been hacked or something. There's been a few questions come through, so let me scroll back up because that was a question for risk 1%. I hope I've covered it enough for you. Best time to create more Darwins, getting more accounts into the index before the investor funds increase exponentially. Yeah, I mean, to be fair, the goal is to get to the index to the point where it's at max capacity, and we would have to create index 2.0. So don't ever worry about missing out, because it will just scale and scale and scale. Alain said, by the way, I had a question. How is the max allocation from investor calculated? Is it if stops are tight, if you enter in one clip or not? And how would I make it bigger in the future? Okay, so I'm presuming you're talking about capacity here. So we measure the toxicity flow of your orders. Okay, this is something that we do from a broker perspective. So we, in layman's terms, effectively, how easy is it to execute your orders at market? I think I deleted it. Did I delete it? Deleted it. Damn. We did an exercise the other day on one of these sessions, and I copied and pasted the capacity explanation, and I said, explain it to me like I'm 5 years old. And I think it went through an example with like a lemonade stand or something. But it was a really good way of explaining it. So, but anyway, that side, I mean, you can always do that, right? You can go on the Darwinex K-base, copy and paste the capacity explanation page, put it into ChatGPT or an LLM, and ask it to explain it to you like you're 5. But essentially, we measure your toxicity flow, i.e., how easy is it to clip your orders at market. Then we measure the divergence that an investor would experience if they were getting slipped on those orders. So, for example, you can see my last update on here was Monday, the 3rd of November, so 2 days ago. My Darwin was at 30.3% return. But if an investor got slipped on every single trade by 2 pips, they would be at 6.62%. Okay, so there's a massive divergence between what I've experienced as the strategy operator and what an investor would have experienced if they were getting slipped 2 pips. So then we basically calculate at what point, at what level of AUM they would start to get slipped. And I think we cut it at 0.2 pips. Okay, so we give a 0.2 pips allowance. Anything after that, we would cap the strategy. So if we scroll down here, we've got max estimated investment. You see my investment's currently 17.62 million, which actually has been increasing quite a bit. It was down at 7 million at one point. As I've added more strategies, it seems to have increased nicely, which is, I'm super thankful for, because I think 17 million, like that's a nice amount. It's nothing to be worried about, but 5 mil, 6 mil, 7 mil, that's something that's really concerning to me specifically. Like I say, I have a very good network of investors and funds that I could work with, to deploy capital to my strategy specifically. So like a couple of million concerns me big time. Whereas if my max investments at 15, 20, 25, 50 million, I wouldn't be worried about that until I was, 5 million away from filling that capacity. But to your question, yes, if stops are tight, then yeah, it becomes harder to clip. So you could spread your orders, maybe work a zone, clip a few times to get your full size off at market, hold trades for longer, have wider stop losses, trade more liquid markets. It's very, very simple things. Like what I think it's quite common sense. It's called common sense cool. It's all the things that you think would help would actually help. So, trading the euro dollar instead of the FTSE 100, right? The FTSE is a thin market. Euro dollar is the most liquid market. So obviously there's going to be more liquidity to fill a larger amount of investor capital on a specific trade, right? Whereas on the FTSE, it would be more difficult to get that fill. I have a few questions about XAQP. Do you look further into growing the number of strategies? I know that you now you have around 27. It's at 29 now. I added 2 more when I did my Q3 review a few weeks ago. And if so, we decrease the maximum drawdown per strategy. Also, if you do 1% max drawdown per strat, won't there be a chance of having a 27% drawdown? I know, since they're not as correlated, but there's still a chance, right? Of course, there's a chance, but there's a very, very, very low chance, i.e. near impossible, that it would go into 27% drawdown, because the way that the strategies are designed is that some are super infrequent, right? So I have one strategy that might execute once per year or twice per year. It's very unlikely for that to go into drawdown the same time as a strategy that I have that executes twice per day. Okay, so that by design, it's very unlikely to happen. They also trade different assets. I have mean reversion strategies, breakout, trend following. Like, I have so many different elements to the portfolio that it's just near impossible for them all to go into drawdown at the same time. The drawdowns are fairly uncorrelated. So even with the 29 strategies, the max drawdown historically, and again, I know that it can change over time, of course, but the max drawdown the portfolio has been in through my testing periods, which is an 8-year period. I explained why I use 8 years in yesterday's session, but it's like a nice chunk of time, without going too far and taking data into account that I'm not really a fan of. But anyway, over the past 8 years, the max portfolio drawdown was 2%, just slightly above 2%. It's like 2.06%. And since it's been live, the max drawdown that it's had is 1%. Of course, when it's scaled up on Darwinex, it's like 4.33. So that was equivalent to, like, at the time, I used to have a higher risk multiplier. So you can see when I first started, it was at 4.81. So it was about a 1% drawdown when I had a higher risk multiplier. As a FYI caveat to that. So yeah, technically, I guess you're correct. Having 29 strategies, it could put you into serious drawdown, but the way, like, by design, that shouldn't happen. And I would, bet every penny I had that would never happen. And I run them all at such low risk anyway, that if they all did start to go into drawdown like that, it wouldn't be too much of a concern. Fulfillment said, excellent content, Kieran. I appreciate that. It's massively helpful. Thank you. I realize it's probably been a while since we've gone over the index. So it's good. It's probably good to refresh that once every so often. But I appreciate your kind words, dude. GVV, is there a link? Yeah, I already answered that. I'll get a link to the PDF. I'll stick it in the Discord. Risk 1%. I'll check it now for you, dude. What's your Darwin? Ping me your Darwin and I'll double check the capacity. Somebody's ringing my bloody doorbell. Setting the dog off. Oh, it's my kids. I ring the doorbell all the time. K-A-Y-D. Sounds like my name, KD. Big KD. Uh, 7.3, so it's higher than mine. I can tell you that much. Okay, so your divergence sensitivity, your Darwin's 14.92% as of Monday. 2 pip slippage would put an investor at 1.2%. Max investment, 45 million as of right now. Yeah, roughly. It's been increasing. I think that we made a change around here to our liquidity provider. I can't remember whether that's when we started aggregating the second feed. I can't remember exactly what happened, but everybody has that sudden boost. So yeah, your Darwin can manage about 45 million. Now remember, that's your risk-adjusted capacity. So for example, my Darwin can handle 17 million, was it? But then I'm being scaled up by 3.4x. So my master account can probably handle 60 million. But you know, I would never run it at that risk level because it doesn't make any money basically. I think my Signal account's up like 6%, barely anything. So yeah, I mean, at 45 mil, I wouldn't be concerned at all. Like, you know, it'd be a great problem to have to be managing 45 million and not be able to manage anymore. But I don't think there's probably not a single trader, or let me rephrase that. There's probably only a handful of traders who are single-handedly managing more than that in the world. You know, specifically retail traders. Obviously, you're going to have large hedge funds who are managing multiple $1 billion of capital, but even then, they're going to be so heavily diversified between traders that you probably still find there's not that many traders who are managing that much size. So having it at that, it's kind of like it doesn't really, it's not a concern. Elaine said he's at 3 million. So yeah, 3 million is something that I would be concerned about. Not concerned as in like it's bad, but concerned as in like I've always said, the guys who've come to these sessions for a long time will know this. I've always said that capacity is not a problem until it becomes a problem. And at 3 million, it would become a problem pretty quick. If you start doing really well and start attracting loads of investors, of course, because 3 million, let's say you do, let's just work out the numbers, right? Let's go 3 million. And let's say you do, I don't know, a 20% year, for example. So you made 600K on that, okay? And this is just through Darwinex, right? And then you keep 15% of what you've made. So you'll make 90 grand, okay? Sounds great, but then, I mean, I don't think you're from the UK, but, let's say you're from the UK, okay? So at that point, you're going to be, I don't know how to work out the tax bands. How much tax will I pay? There is a tax calculator. So let's just go 90 grand a year. So this was based on 20% year. And again, this is the UK, so of course it's going to be different. So that means that you'd make 5 grand a month. Okay, which, don't get me wrong, probably sit you in the top maybe 10% of people, maybe 20% of people when it comes to how much money you make month on month. But it's not life-changing. Like, that doesn't allow you to you know, have a mansion, have like fancy cars, go on holiday all the time, all that sort of stuff. And that's when you're managing 3 mil, which is, you know, a pretty decent chunk of capital. And my thoughts on this is, you put all the time and energy and effort in to learn how to trade over the past few years, however long it may be. You're managing $3 million worth of investor capital. You're doing everything right, but then you're capped by how much you can actually manage. So it's worth taking some time to increase that. okay, to increase like how much money you can make. Because if you can increase your capacity to 30 mil, again, this is all hypothetical, right? I'm not saying that you're going to manage 30 mil, you know, through Darwinex. Could happen. Is it going to happen? I don't know. Now, let's say you did a 20% year, and let's just say for this, it's outside of Darwinex as well. So if you're managing 30 million, okay, so you made 6 million in the year and you're keeping 15% of that. Now you've made 900K in the year. Okay. So we've gone from 5.2 grand a month to 900K. Again, this is the UK, so it will be different. You've gone from 5K a month, 5.2 to 40.7K per month, just because you've got more AUM. Okay. But you're doing the exact same thing, maybe with some slight variances because obviously you've changed things for capacity, but it's worthwhile doing the work so that you can manage more capital. In fact, we're looking to send out an email, or one of the emails that we're looking to send out when somebody gets included in the index. At the end, I was working on the wording of it today because I think it alluded to like everybody needed to make a change, but I made some changes to the way it was phrased, but it was basically ensure moving forward that you're paying attention to your capacity so that you understand how scalable your strategy is. Because if you come into DarwinIA Gold and your max capacity is 300K, you're probably never going to get an allocation in the index, because between your DarwinIA allocations, your investor capital, there's probably not enough room in it for us to start allocating index capital to you. So it's important to understand, okay, I have a capacity of 1 mil. I need to get that to at least 5 mil or 10 mil or 15 mil. And yeah, it's probably going to take some work and you know, it's going to take some testing and stuff. And you kind of don't want to blow up your strategy in the process. Like you don't want to take a winning strategy and lose that because you're trying to increase the capacity. But is there things that you can do to increase that? Again, multiple orders, work in an area, wider stops, holding trades for longer. Trading more liquid markets, all of these different things can really, really help to increase your capacity. But yeah, like I say, that was all hypothetical. I was just, you know, highlighting the amount of money that you can make when it comes to scaling, because technically you're still doing the same thing from an intraday perspective. You're still just trading. You're doing the same processes. You're physically not doing anything different, but the payoff is significantly different. How can you have multiple accounts? Sorry, I'm new. So you can have multiple accounts through Darwinex. You can open multiple accounts under the same username. However, if you're on about Darwinex 0, you have to create a new account with a new email address. It was in our pipeline to release a feature where you could just create multiple accounts under the same username. But we had so many tasks that we had to complete for the Spanish regulator, the CNMV, that just kept getting pushed back and pushed back and pushed back. I don't know where we're at with it now, if I'm honest. That's something that I'll ask the team this week, see if I can get an answer for that. But you can still make multiple accounts. You would just need to log out and sign in with a new email address and then create another account that way. Elaine, yeah, would like more for sure. That is why I was looking at it, since I'm reaching gold now. Yeah, so it's good that you're thinking about it now before it's an issue. Okay, so just start trying to do some. I'm presuming that you're a discretionary trader, but if you're not, if you're an algorithmic trader, then it's going to be a lot easier to check and to do testing. But just run some sim tests, like changing slight variables, like trading with multiple orders, pyramiding into a position like within a small area, widening your stops, holding the trades for longer, maybe cutting them at the end of the day instead of after 2 pips. Like notoriously, scalpers have really low capacity, whereas swing traders have really high capacity. Again, it's commonsensical, right? If somebody's getting in every like minute or two, it's going to be really difficult to do that at scale with large amount of with a large investor capital. As well, they're going to be paying, you know, a hell of a lot more in commissions and fees. Jackson, how are we doing? How much return do you need to make roughly to be profitable with the new boosters? I have no idea. Somebody shared a spreadsheet, I believe, in the Discord. So it might be worthwhile pinging the Darwinex 0 Discord and just asking if somebody has that, because I'm sure somebody did it for the permanent allocations and the boosters. Probably be able to work it out, but I know somebody had already done it and put all the calculations together. Okay, I think we got through everything. I know somebody who did ask for their Darwin to be analyzed, but we might have to do that tomorrow. We've got the guys from Edgewonk joining us tomorrow again. So we'll do a proper strategy development session tomorrow where we go through, or Darwin analysis session, I should say, where we go through somebody's statistics and metrics and see what improvements can be made. So let's wind it down. It's been a bit of a different one. Been going through some index stuff, and at the beginning, if you missed my little talk at the beginning, I was talking about getting a job in the industry and the benefits of that and how it can positively affect your career. So if you miss that, it might be worthwhile going back and watching that. It was only like a few minutes, probably 5 or 10 minutes or so. Rob, perfect. Rob did an Excel sheet on that. Could you ping it into the chat in the Discord? That'd be awesome if you could do that. And then Jackson, if you're not in the Discord, just join the. I'll ping the. In fact, I won't ping it in because it'll come through. On my thing as well. Our Discord's it's on our website. It's on our YouTube channel. You should be able to find it. You'll be able to find it if you go onto our YouTube channel or onto our website. So just jump in the Discord channel if you're not already in there. Go into the English chat and Rob will send it in there. And Rob will massively appreciate that. So guys, it's been a fantastic session. I've thoroughly enjoyed it. I love doing different kind of different topics and stuff. Which is why I wanted to go over the index stuff today and all of that sort of stuff. Or not the index. The idea of having a job in the industry and stuff. So yeah, I'm rambling now. It's getting late. And I start work really early because everybody in Spain, I think they're like 2 hours ahead now because of daylight savings time. So I always get to my desk really early, and I've got 2 little kids, right? So they never let me sleep. So yeah, anyway, I'm gonna wrap up here. So guys, it's been fantastic to chat to you all today. I appreciate every single one of you who has come in, watched, asked questions. I wouldn't be doing this if you guys wouldn't be coming in here and asking me questions and keeping me on my toes. So I appreciate every single one of you. I hope you all have a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world. Have a great rest of your day, and I will catch you tomorrow at 4 p.m. UK time for a strategy development session with Edgewonk. Peace out, guys. Have a good one.